Hi, this is Chris with Invest LYH, and today, rather than do a property, what I'm going to do is just show some simple economics graphs to show you why we had a supply shortage in terms of the homes over the past few months, almost a full year. So let me go ahead and quickly share my screen. Give me just a moment to do that. So what we have here is a simple supply and demand graph. And I'm just going to take the green here and put a little point in the middle here. This is what we call equilibrium. This is where supply equals demand, right? Sometimes we write it supply equals demand. And what happened was with each of these curves, there are these things called shifters. And what these shifters do is they shift the curve on the graph itself. So what could shift a curve? Expectations. So at one point we had increasing interest rates, and so the consumers had expectations that the interest rates were going to rise, and then they started rising at a rapid rate. So of course the consumer said, I need to buy now, I need to buy now. What that does is it shifts the curve, and that's a demand shifter. It's a change in expectations. So it shifts the demand curve outward. Let's call this D2. What that does now is if we are looking at the original price here, let's say it's $200,000, right? We're looking at properties here. Is now the supply for homes didn't change, but the demand for homes is all the way over here. So now we have this gap right here. And what we call that is a shortage. And again, I said that expectations is one of the main driving factors of why the demand curve shifted, and it increased the amount of demand, and it appeared to look like a supply shortage, when in reality what it was the shifting of the demand curve. Another one could be tastes and preferences. More people wanted to buy a home. So I would say in our recent experience, the number one would be the tastes and preferences. And what that means is more people wanted to buy a home because they were living, they were working remotely, and they wanted more of a larger space. What happened after that is interest rates started to increase. And then the third thing was, because of the interest rate increase, our expectations got out of whack. And because of these three factors, it shifted this demand curve outward. And it created what we call disequilibrium. This is where supply does not equal demand. Now, if you see here, the only thing that we can do to show where supply does meet demand on this new demand curve right here is by increasing the price. And that's where you saw that upward pressure in prices. It's because we shifted the demand curve outward, and along the same supply curve, we had those increases in prices. Along this same supply curve, we had those increases in prices. So I hope this video helps you guys kind of understand a little bit behind the economics of real estate. I'm going to stop sharing here. Just so you know, I am an economist by trade. I have an advanced degree in economics, and I also have an undergraduate in economics as well. So I know pretty much how the markets work, and I can give you a little bit of insight in terms of what's going on with the markets, especially in a real estate, with a real estate tilt. So I hope you guys like this video. Please like and share and subscribe, and I will talk to you guys shortly. Thanks so much.